Welcome to this week's live ASX strategy session. Thanks for joining me. Great having you with me for another show. Lots of interesting things to talk about this week. The stock markets, the commodity markets, all sorts of things going on to have a talk about. And of course, at the back end of the show, the second half, we'll go through any stock codes you have. So any stocks you're interested in, you want to see the charts, want to get a look at the technical outlook, get them ready. We'll go through those in the, as I say, the second half of the show. Now, as always, everything today, general commentary only, doesn't take your personal situation into account. Having been through all of that, let's get into this week's first chart. And we're going to start off with the ASX 200. And so the ASX 200, it started to rally off the moving averages. Does this set up the index for a run at the all-time highs? I'll talk a bit more about this in a moment. And then over in the US, the S&P 500, well, it's on the verge of finishing January with a gain. So what does a positive January mean for the rest of the year? I'll come back to this shortly. I think you'll be surprised at the difference January can make. But before we get to that, let's start with this latest price action in the ASX 200. So last week we spoke about a stepping pattern in the ASX 200, and you can see it from the November low. And so what I mean by a stepping pattern is that we've got strong rallies followed by short, shallow pauses. And you can see this pattern all the way up. Strong rally, short, shallow pause, strong rally, pause. And then this week, the ASX 200, it's had another step higher. So this continues that sequence of rising lows and rising highs that has been in place over the last few months. And that sequence of rising lows and highs is, of course, the underpinnings of a bullish trend. The other thing this chart is telling us is that the dips, all these dips are being bought. And you can tell that from the price structure. So what we can see is that these pullbacks are relatively shallow. Like you look at the extent of the rally, then you look at the pullback, it's relatively shallow compared to the previous advance. And when you see this, it's a sign of buying interest absorbing the stock that comes onto the market. And then as the supply dries up, it's then a chase to buy stocks and push them to higher levels. And that's when we see these strong advances, which have been occurring, all the way up since this November low. The latest rally. So this latest rally we have, well, that comes off the moving averages. I've got the 50 and the 100-day moving averages on this chart. And you can see the moving averages have also started to turn higher after this period of pullback we had towards late last year. I think that with prices now re-established above the moving averages, I think this sets up the ASX 200 for that run at the October high. So there's the October high, and with this stepping pattern, the rising moving averages, the rising lows, rising highs, I think all those things work in favour of a push towards new all-time highs. Now, this is important. That doesn't mean it has to happen next week. It could be it would be entirely normal to get another couple of weeks where prices just track sideways, and that just lets the moving averages catch up. And when you get that nice balanced rally, it does set the tone for often a more enduring rally. So if we get some sideways consolidation, I think that would be entirely normal. And in fact, I think that's probably the most likely scenario. But this underlying structure we have here, it is supportive of higher levels, and I think that's the path of least resistance. I think the path of least resistance is higher. The key to the next push in the ASX 200, I think it could come from the financial stocks, in particular the banks. So let's just jump over and look at that. This is the ASX 200 Financials Index, and of course the banks make up the biggest portion of this. So prices remain below the moving averages, and the moving averages continue to decline. But I think the encouraging thing here is that prices have stabilised over the last, say 2 or 3 weeks. And also look at the latest attempt to sell off. So that was just last week, mid last week. prices started to sell off again. But that sell-off was brief, and then it quickly reversed. So look at how quickly prices have rebounded. The fact that there wasn't follow-through selling after the initial breakdown, and often you get these initial sell below the moving averages, and then you get that follow-on selling. The fact that we didn't get that follow-through selling, and instead we got a rebound, it's a sign that buying interest might be starting to re-emerge. There's still a bit to do to turn this around. For instance, prices need to get back above the moving averages and establish above them. So there's a bit that needs to happen before we can say this has turned around. But it is interesting what's happening. I think the levels to watch are, well, it's the high from mid-January and it's the low from last week. I think whichever breaks first will likely lead the next round of momentum. Look, if this low from last week breaks, well, it really does. It's not going to be a nice structure. But let's see what happens. Let's see whether whether this quick rebound is a sign that prices will try higher. So that's something to watch through the week, and I think will be important for the ASX 200. Looking at the equal weight, the ASX 200 on an equal weight basis, it's quickly pulled back. It's quickly pulled back just over the last couple of days, and that's always cause for concern for some people, and they start to worry. They think that any sign of weakness is the start of something bigger, and then they quickly go and they sell. And I think that way of thinking, I think it's problematic because it makes it really hard to stay in a trend. If every time you get these pullbacks, you're worrying about something larger, it really does become hard to stay on the trend. So this is where we are now. We're having another pullback, and we don't know. We don't know whether this is the start of something bigger or just one of those routine temporary pauses in the trend. I think if we want to be in the stock market, we've got to give our stocks, the stocks in our portfolio, we've got to give them room to move. So these pullbacks, they're all part and parcel of being in the market. And overall, I think they're good because they let the market consolidate the previous gains, and then often they establish a platform for further gains. You can see all these other previous occasions, pullbacks, new platform, prices rally again. So, of course, we don't know how this one will resolve, but I think the odds favour it does ultimately resolve to the upside. At this stage, there's nothing here that suggests trouble. The moving averages are rising. Price is above those averages. As I said with the ASX 200, we could get some more consolidation in the near term, maybe the next couple of weeks, while the moving averages catch up. I think that's entirely possible, and probably that would probably be my base case. Maybe some consolidation in the near term, but overall, I think this is a market that I want to remain long. I bought some stocks this week. I've also sold some as they came back to their exit levels, and that's what an actively managed portfolio is all about. It's about rotating out of what's not working and then getting into new possibilities. That's the way I continue to approach the ASX. Now, we're going to jump to the US markets now. If you're getting some value from this, please click that like button, leave a short comment, tell me what you think. Are we heading to new all-time highs or are we heading into trouble? It's always interesting to see the thoughts that come up in the comment section. But please click that like button right now while you're thinking about it, because it really helps me heaps, because YouTube sees people are watching and engaging, and YouTube shows other people, which makes the whole strategy session situation possible. So please do that. All right, S&P 500. Well, is the S&P 500 about to have a positive January? And does it really matter? Well, there are some interesting statistics around January and what they mean for the rest of the year. I'll show you those statistics in a moment. But first, is this likely to be an up month? So let's just mark where the close of last month was. It's around about here. That's the close of last month, and prices are currently up just beneath their all-time high. So that's about 1.9%. Prices are about 1.9% above where they closed last year. So of course, anything can happen. There's one more day left in the month. This is Friday in Sydney, and we're going to get Friday in the US in a few hours. So, of course, anything can happen. But I think it's fair to say the odds favour a positive January. The S&P 500, as I say, up 1.9% for the year so far. And so what does this mean? What does this mean if we get a positive January? Well, I saw some interesting statistics this week. Let me show you this graph which I saw. It turned up on my Twitter feed, on my X feed, I should say. And so what this is doing, it shows the performance for the rest of the year of the S&P 500 when January is an up month. Now the data goes back to 1950, and now you can pause this video and go through this at your own pace. But in short, since 1950, whenever January has been positive, you can see these black bars above. That's showing what the gain was for the rest of the year. 87% of the time, 87% of years have been positive after a positive January. And the average gain has been 12.2%. Now, of course, that doesn't guarantee a positive year because, as you can see with the red bars, 13% of positive Januaries went on to have losing years. And even if 2026, even if this year is an up year, we don't know the path the market is going to take. So just remember last year, for instance. So 2025 had a positive January, and then we had a big sell-off in March and April. So yes, it was a strong year, but you still had to navigate it well. 2025 was probably, I think for some people, 2025 would have been a losing year, probably for a lot of people, as they may have well sold at the lows in March and April and it just didn't get back in. But I think based on history, the odds favour 2026 being a positive year. And I think we should use this information. So the way I think we should use this information is to say that we have a supportive backdrop, but we still need good execution. And for me, that means using a rules-based process to buy stocks in uptrends, to sell to, if a stock is doing well, I want to let those profits run. But if it's not working, I want to get it out of my portfolio. I'll have an exit strategy to minimize losses. So I'm protecting capital when things go wrong. But of course, that's what I do with Motion Trader. If you need help with any of this, then there's a link to a free trial in the description section below. So that's what the statistics tell us. What does this price structure suggest? Well, the underlying trend at this point is that we've got rising moving averages. The 50-day, the 100-day moving averages continue to rise. Price is above those moving averages, so that is a bullish structure. And when we've got a bullish structure, that's the path of least resistance. And the S&P 500, well, when we look at it just in the most recent months, it still lacks that near-term momentum. It hasn't really been able to make any real headway for the last 3 months. You can just see it through this area here. Like it's just poking through the top there, but really it's been a pretty lackluster 3 months. It's really been tracking sideways along the moving averages. If anything, it looks like the S&P 500 is likely to continue trading sideways over the next few weeks. I said the same thing last week. It looks like we could get that sideways movement and even pulling back towards the moving averages or into the moving average range. We could see that over the next maybe over the next week or two. And the biggest drag on the S&P 500, well, it's been the Magnificent Seven. Those big stocks, Nvidia, Microsoft, Apple, Alphabet, and the like. They're the ones which have been making it difficult for the S&P 500 to rally. Let's just have a look at them now. So this is the Magnificent Seven. It's an ETF. This is an ETF which tracks those top 7 stocks. It looks similar to the Nasdaq, but it is these top 7 stocks on their own. So as I say, it's been like a consolidation phase for this group over the last about the last three months, and it remains in that consolidation phase. I think the positive is that prices have moved from last week. Prices have moved back above the moving averages. That's a positive. That disengages any downward momentum that could have been building through this selling late December into January. There has been a buy the dip. It has taken prices back above the moving averages. So as I say, that disengages any sell cycle that was developing. The levels to watch, I think it's last week's low and the December high. I think whichever breaks first, I think that likely sets the tone for the coming weeks. With the overall upward trend, I think still intact, I continue to favour the upside. And another reason I think the odds favour the bulls is due to what we're seeing in the equal weight. So just having a look at the US market on an equal weighted basis. And when we do this, so this is the S&P 500 equal weight. This week has seen it's seen a shallow pullback, and we often talk about these shallow pullbacks. They're often consolidation, and this one's followed a strong rally off the moving averages. So it's not surprising that we are getting that pause and consolidation. Big tech is a missing factor at the moment with the US market, but I think it's a positive that we continue to see broad participation as evidenced by what's happening in the equal weight. And it's not just in the S&P 500. We're seeing signs of participation across the indices, and that includes the small caps and the micro caps, and I'll cover the small caps in a moment. I think the play here, I think it's staying long stocks. The underlying trend remains in place, so I think it's a case of continuing to hold what's working until there's cause to do otherwise, and that's where a good exit strategy comes in. If a trend breaks down, I don't want to just hold and hope for a recovery. I want a clear-cut plan to protect capital. But at this point, it's staying with what's working. Okay, I'm going to jump to the US small caps now. We've then got the Aussie small caps, the small ords. We've got the commodities, gold and silver. Really interesting what's happening there, as well as copper, oil, and uranium. There's all of them really are doing stuff which is well worth having a look at. And then your stocks, of course, as well. Any stock codes you've got, get them ready. We'll go through them in a moment. But of course, that wraps up the free section. If you're not a strategy session member, there's a link below. Click that, come in. Cost you very little. We go through, as I just noted, then a whole lot of stuff, and it doesn't cost you very much to be across it all. And look, good chance you're going to find some opportunities amongst it all, which more than recovers your investment in the sessions. All right, so let's go over. Let's start with the Russell, the US small caps.